With your focus on building your down payment and figuring out what your mortgage cost is going to be, sometimes you overlook those small fees that are associated with purchasing a home. So today we're going to be talking about those smaller fees that you don't think about. I'm Margaret Herdt. I post new videos every Tuesday all about Loveland and the surrounding area and a little bit about real estate. So be sure you subscribe so you don't miss out. So the number one fee that is really important for you to do is a home inspection. A home inspection helps to prevent you from buying lemon. Inspectors will look for signs of structural issues, roof damage, conditions with the gutter, the furnace, the water heater, all of those major components they're going to look at. But they also look at wear and tear on things. You might have negative drainage that eventually will be an issue for you if you don't fix that. So those are the things that they're going to be looking at for you. They're a third party. They don't work for you. They don't work for the builder. They are there to help you make sure that you are getting a good sound property. And it's really important for you to, even if you're buying new construction, to do a home inspection. Like I said, that $300 to $600 that it's going to cost you could save you thousands of dollars later on after you buy the property and find out there's a problem. The second thing that you're going to pay for if you have a loan is, or even if you don't, if you are a cash buyer, it's a good idea to have an appraisal. So an appraisal report goes to the lender. And this report, what it's going to do is to make sure that you're not overpaying for the property. So if you bid a certain dollar amount, that lender is going to make sure that that home is worth that dollar amount. An appraisal can take about 2 to 3 hours, and that cost will be anywhere from $300 to $600 depending on the square footage of your home. It could be even more if your home is very large. The third thing that you will be paying for is an application fee. So before you ever are approved for a loan, your lender is going to take this application fee. And basically what that's going to tell you is, or tell them, is if you can afford to buy this property that you're looking at. And actually it's a good idea to do this step number one, because if you don't know what you can afford and you're out looking at houses that you can't afford, it's not fun when you find out, oh gosh, I can't afford that house and I really want it. So make sure that you do an application with the lender before you even go out and consider buying a property. That application fee can be anywhere from like $75 to $300. The lender will go through and show you all the costs that are associated with buying a particular property. That's called a truth in lending form. So number 4 is title services. Title services will cover making sure that the property belongs to that owner and that they can actually sell that to you. These fees will include a notary service, government filing fees, and a few more things. These fees can cost anywhere from $150 up to $500. The fifth thing is an origination fee. The lender will charge you this upfront fee to make the mortgage loan. This will include processing, underwriting fees, researching, and funding the loan. These fees are quoted as a percent of the total price of the home. It can be anywhere from 0.5% to 2%. The sixth thing is a survey fee, depending on the type of property you're buying. If you're buying just a lot in town, there's not going to be a survey fee. However, if you're buying a piece of property that has acreage, there may be a survey fee. Survey fees can be very expensive, anywhere from $150 to thousands, depending on what the size of the acreage is. And that survey is going to determine your boundaries as a new homeowner. Number 7 is private mortgage insurance. It's called PMI. PMI is used if you put less than 20% down on a loan. PMI actually protects the lender in case you go into foreclosure. So PMI insurance is not protecting you, it's protecting the lender. PMI insurance can vary in cost from 0.3% up to 1.5% per year on the loan or the original loan. So it can get expensive, but if that's the only way you can buy a home, it's worth the cost. And number 8 is a tax service fee. The tax service fee, it's really inexpensive. It's about $50 to $100. It's not a lot, to ensure that your property tax payments are up to date and that payments that you make are appropriately credited to you, the right home. Always ask questions when it comes to understanding the fees that you're going to be paying from the lender. Your lender will go over those. I'm happy to go over those fees with you, just so that you understand what you're paying for. Don't be afraid to price shop to ensure that you're getting the best bang for your buck. Just because you're paying thousands of dollars for a new home doesn't mean that you have to spend thousands of dollars on fees. So be sure to shop around, and I hope this information was helpful. If you have any questions regarding any of this information, please see my information below. See you next Tuesday with some more tips on real estate or a subdivision or something going on in the area. I'll see you then.